This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Daniel Curran, a super angel in Silicon Valley in San Francisco. Daniel, thank you for joining us.
Thanks for having me.
Can you tell us how you got into early stage investing?
Well, long story. I started as an engineer, went to engineering school for about 8 years, and became a rocket scientist out of University of Illinois, and worked for Northrop Grumman. And that ended around the time the Cold War ended, about 1990. So then I started looking around and doing other things, and I got some training in environmental and civil engineering and worked for Northrop once again for a couple of years doing that. And also Lockheed and what is now Raytheon, it used to be used aircraft. And searching around there, and that really trailed off in 1992-ish. And so that's where internet service providers kind of just showed up on my gate at my property. And I said, what is this? And learned and opened up to the internet, and was awakened a lot more when Netscape went public in August of 1995, because it had a founder, Mark Andreessen, who's from my school, University of Illinois. And so I went and worked at a internet service provider a couple of years, built that up, sales and marketing, then went to do some things like Jeff Bezos was doing at UCLA. It was called dentalsupplyhouse.com. That for a year, tried to make a go of that in the dental niche, and then worked for a web design firm, US Interactive, which had recently gone public at that time, 1998. And then from there, took one of the companies that I founded, StockPicks.com, public under an umbrella company, US Lab, in 1998 in the dot-com craze. Was there a couple of years until 2000, and then I became a fixer for large corporations again, Western Digital. Advised the chairman and the CEO on their turnaround from bankruptcy in 2001, from near bankruptcy, and took it from 220 a share to 114 a share in the preceding 13 years. I was only there about a year, but we sold off a lot of the subsidiaries. Then I went and did another startup in IP, networking, and storage, data storage, working with Stanford and the founder of SCSI, Larry Boucher, and tried to make a go of that and sell it to Cisco. And that was around 2002, and so that was a little slow over time. So Cisco came out with that same product about 3 years later. Then started teaching at TLA, a Tech Innovators Forum, much like there's one at UC Berkeley, and then highlighted and interviewed a lot of founders on how they bootstrap their companies from 0 to 40 million. And so covered a lot of that in a podcast kind of a format. And that gave me the idea for one of my pet projects now, which is called Customer Expressions and Reviews, where people put in improvements for products and services that they want to see happen, like Ringer or other things out there. And then we leverage that and send it to that vendor in question and all their competitors to force them to fix or improve their product features or lose market share. And so that I've been doing since 2012. And so a lot of sweat equity and 60 different sweat equity employees in that. And then what came on the radar was a lot of different startups that were available through a couple of online platforms like AngelList and Funders Club. And that's what I started in mid-2014. And so to date, I've done over 115, about 6 plus are unicorns. 2 of them exited: Cruise Automation, cash exit to GM; Dollar Shave Club, cash exit to Unilever; Cabify, which is the best one on paper so far. And then there's a Betterment financial site. Then there's a couple others that I can't talk about. And so from putting large sum into a lot of different startups rather than put it into public equities that pretty fully valued, I saw the trend that you have to get in earlier, because by the time an IPO happens, all of the values pretty much been captured in most cases. And so I got a lot of visibility among founders finding me on LinkedIn and Crunchbase and AngelList and other places. And so started helping them. It's really fun. And so I get about 70 or 80 decks a week from them and a lot of good recommendations on LinkedIn. And so that's where my focus is right now, is what I call a super angel, where people that have done over 100 investments and they're pretty good at it. The super, really helps too. And so I have a process going through what they need, and if they're ready for the big leagues of Silicon Valley, to be shared with that network, and then put on a track to unicorn exit, which is what I focus on. I'm vertical agnostic. So that's pretty much how I got into it, technical background.
Well, you had quite an experience with startups over the last 20 years in Silicon Valley. I'm interested, how do you think the startup has evolved over the last 20 years? What's different today than what was, say, 20 years ago, and what direction is it going?
Well, I think one way that, I see a lot of local angel groups, which I belong to many of those in both Silicon Beach, Los Angeles, and Silicon Valley. And the change that I see is the ones that are the most advanced appear to be the ones that are online, because we have instant, transparent data. We don't necessarily even have to meet the founders. And I'm talking about when buying through syndicate, because usually you're just one of 99 investors, accredited investors. So going through basic criteria, on any deck, the first slides I look for that I'd like to see in slide number 2 is traction, the annual run rate last 4 months for a stable product line that's growing pretty fast. And then 3 different competitive slides after that. And then I can evaluate if the TAM is big enough for this to be a unicorn. And then I look at the team and see if they're the right killer kind of CEOs that can absolutely execute under all kinds of environments. So the thing I see changed, that I don't think a lot of angel groups that are offline, is I don't think they focus enough on the path to an institutional exit, either an acquisition or IPO. Most of the time we're talking about an acquisition, or something can organically keep growing. And I think they're basically they sometimes focus more on mom and pop businesses, and there's not much consideration to, where can this be exited? One of the things I look at, I'm looking at how can I stack the deck unfairly so that this startup gets to an exit, $1 billion exit, within 7 years. That's solely what I focus on. Insane focus on risk and uncertainty also. That's the name of the game.
Well, exits are really the key for any investor, although I agree most groups are focused on the pitch or the story or what have you. What do you do that really helps focus it on an exit within 7 years, which is very good considering most people are in these deals 8, 9, 10, 12 years or more? What do you do up front that gives you that advantage for getting an exit in 7 years?
I look up the sector that they're in, and I also ask for, on a competition sheet, I ask them to have a column where they put in what their competitors are funded at, and then that gives me transparency into the partners at the VC firms, where they're from, what industries they're from. And then since I've been in many diverse industries, kind of agnostic, feel comfortable with any industry out there. And so then I see activity in that industry. It may be an old stodgy industry, that the old stodgy guys that are not even using email or cell phones or smartphones, they're not even hooked up. And so while you may want it to happen, I don't focus on what I want to happen or may want to happen. I look at what is most likely, and I like to usually see history there. And that's the reason why I invest in very few startups that have blockchain, because I haven't seen that many that actually have revenue.
What industry sectors do you focus on today, if not blockchain? Where do you turn your attention?
Well, I'm pretty optimistic and opportunistic, basically, where I keep an open mind. I know about biases, or one of the negatives that you could have. If I had my biases, I might not have invested in Robinhood. I didn't have the opportunity, so I didn't. But there had been a predecessor called Zeco, which offered free trades and so on. So not want to look at biases. It's more what I do have a bias against hardware, very difficult area, having been from Western Digital and hard disk drive industry, healthcare, anything that relies on a politician or governments to make decisions. I love consumer internet because I basically look top down from what are the highest valued companies out there, and most of them that have the least hassles from a financial point of view anyway are Facebook, Google, even though they have some concerns, but they're still making lots of cash and have those net increasing returns, linear costs, exponential revenues.
And so what is the next step for you guys? Where are you looking to go in the next couple of years? It sounds like you're helping these startups get into a place that they can go funding.
Yeah, what I do, let me give a good example. I started working with a company called Allset, which their website's allsetnow.com, and they are a beginning from your appetizer to your dessert pre-ordering dining platform. So you can basically remove the friction, and this is one common thing I look for in consumer internet applications. They remove the friction of wait times whatsoever at a restaurant. So that's off the table. And, they have a lot of benefits for the restaurant, that there's increased turnover, loyalty, so on. And they have no direct competitors. And so that was one where the founder came to me. He'd also gone to a lot of other super angels that turned him down. And so what I do, and the magic that I provide them, is I endorse them, work on their deck, help them run the business if need be in the beginning, and then take them to the appropriate VCs and partners specifically that have been from an industry that would be acquiring their company. So that's how focused, right from when I'm looking at a business plan deck, I'm looking at how is this going to exit. It can't just be, I don't have enough resources currently, I'm not a VC yet, to go and fund things pre-revenue or in areas where I would like to see progress. Like one sector that I like to see progress is what I'm calling the immortality sector. So I welcome startups, whether they have traction or not. I'd love to hear about brain-computer interface, brain emulation, so it can emulate how a person thinks, downloading of all the data in one's brain so that it can then be put in a droid so that can live on immortality. And then cryonics is also of interest. And I think that's going to spur a whole new industry in estate planning, where it's not necessarily that all of some of the estate would be left to their charities or descendants. They may leave it to themselves for when they may be woken up at some future time. So I look far down the line. And that's why I started Custex. Elon Musk is solving the problem of climate change in a private way. He really doesn't need the government's help anymore. And if that doesn't work, then he's going to take off to Mars. But another problem that I saw is the potential when the recession hits, there's layoffs, and all of the artificial intelligence that's coming is going to cause massive unemployment. And if the people don't have a platform, the 99% don't have a platform where they can force those in power to do what they want, then we're headed for a lot of civil wars around the globe. So that's what the Custex product and service improvement platform is for. So those are the things I like. I wish that VCs would focus more on not only the impact, but looking at the exit so they can be more successful in their industry, because the statistics out there, maybe 80 or 90% are barely returning capital to their LPs, if at all. And if they can put these more rigorous screens in that I've used to get 6 to 10 unicorns so far, you could be a rocket scientist like me, but they're adaptable to anybody. And I welcome founders to send their decks to me. Hopefully they have 200K annual run rate without direct competitors, and 400 to 500 to $1 million annual run rate if they have competitors. And then we have to look at competition to see where they're going to niche out their market to possibly succeed. But it's a lot of fun hearing from them. I can be reached at my LinkedIn page, which is redirected from my my name, Dan, Curran, CURRAN.com. That shoots over to my LinkedIn page.
That's great. We'll put that in the show notes. We always like to put in the details of how people can get back in touch with you, so we'll make that available to them. In the last minute we have here, what else should we cover that we haven't already?
Any questions that you had? I talked too much and didn't give you a chance to ask questions of, I'm an angel, I'm not a VC. So I see things I have a lot of experience in a lot of diverse industry. I've operated companies big and small. And I'm a mechanical engineer, so I think inputs and outputs and business models and look at things probably different from someone that just has a financial non-operator background.
Right. Well, my final question is, it looks like your thesis is you get in very early in long-term trends. Nothing short-term, they're all very long-term. And one of the biggest trends coming up is climate change. What do you think about getting in early on climate change and that as an investment opportunity?
Well, in that area, I would like, unless I get significant resources, if you want to play in hardware solutions, then you're going to be a VC fund or something over 100 million. But if there are consumer plays, like say an app that locates water for people in Ethiopia or Kenya after there's been some well drilled or some new technology that Matt Damon has sponsored, that would be an example of a cool app. There's so many areas that people can make apps that a lot of these countries, they've never even had landlines. So they've leapfrogged to cell and smartphones. And if they just have that basic information, that just brings a whole generation, skips them a couple of generations in technology. So those kind of things are good to see.
Well, great. Well, appreciate having you on the show today. Hope to have you come back and give us more detail about the investment thesis and getting the returns. The returns are spectacular, and I know many groups would love to have those returns. And it appears you have a good formula and a good thesis, and dive into that in more detail. But for now, we're out of time, but thank you so much for sharing your information with us.
Yeah, thanks for having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.